Everything's good there?
Yeah, yep.
Now I just need to hear you. All right, awesome. So a couple more we're going to let in, and we're going to get started here. So, guys, appreciate everybody joining today. As I was sort of starting to say here at the beginning, today what we're going to use this time for is obviously go into what MB Capital does and how we help clients, and then what Alpha Funding does and how they're helping clients. But given the state of where we're at, and hopefully everybody's doing well and they're social distancing and washing their hands 100 times a day. But obviously things with the economy are changing, things with lending are changing. So really use this time as an update and a way to really answer any questions that you guys have, so that you can start to plan the right way for your real estate investing business. At the end of this, I do believe when the dust settles and everything kind of gets back to normal operating procedures, there's going to be a ton of opportunity in the market. So those who start to take the right path forward to position themselves with capital and funding and building the right team around them are going to be able to take advantage of great opportunity. So today we want to make sure that we're educating. We're here as a resource for you, but more than anything, just start to answer some of the questions that you have. To the right, you'll see a group chat here. Any questions that you have? Yeah.
Nick, Eric was just asking if you could hide your video, whatever that means. Hide videos, I guess, at the top.
Everybody has their.
Can see a few participants. Yeah, there's a few people's video. There's two people that have joined us that we could see their videos. So he was just, I guess, trying to see if you could hide theirs so that their video, just having the two of us. One's off, and there goes. Yep. All right. Sorry for the delay, guys. We're back on.
Life in the new world, right? Zoom meetings, teleconferences. So face-to-face is definitely not happening right now. But as I was starting to say, there's a group chat in the bottom corner. Any questions that you have, any questions that pop up as we're going through this stuff, shoot them out there. We want to make sure that we're answering a lot of questions today. We may answer some of those questions naturally, just through our conversation here. But anything you want answered, anything you have questions about, start to shoot them out to us, and we're going to be able to go through them here in a little bit. Use today as a lot of question and answer. So what I'm going to do now is introduce my my co-host here, David Hansel, president of Alpha Funding Partners. David, I appreciate you jumping on today, being able to talk to us for a little bit, and really to give some guidance here on what the future of hard money lending and real estate investing is actually going to look like.
Sure. So I'll give a quick intro about Alpha and our team here before we dive into too much content. So Alpha Funding Partners is a hard money lending company, for lack of a better way to put it. But we've been around in the market since 2007 and have primarily focused our efforts in the Northeast, but we are now moving throughout the rest of the country. Earlier this year, we merged with another lending platform out of Long Island called First Rehab Lending, and Alpha Funding Partners was born. We brought in, with that merger, Fred Assini, who is the owner of that company and also owned a national mortgage company, resi mortgage company. And we brought in another gentleman that was part of this merger from that side, Andrew Smith, who's spent his life in capital markets, was a professor at London School of Economics, has had a great career on Wall Street. So right now, I guess jumping into what we were doing and what we will be doing. The market has changed drastically over the last week to 2 weeks. And I think that obviously there's going to be crazy challenges for a lot of people, but I am very, very optimistic about what will come out on the other side. You know, for our company, we're still lending capital, and we've dialed back what we're doing at the current time because of the situation. But I say I'm proud to say we're lending capital right now because most of the capital in the market, especially for bridge, has totally pulled out. And so it's our commitment to not only stay on and service the folks that we've worked with and we have loans outstanding with, but to continue to provide funding. We're getting, you know, the amount of call volume that's coming in new deals, you know, is somewhat overwhelming, but thankfully we got great processes and systems to handle that. But I think we'll dive in a little bit more about the opportunities coming up as we go through. But, you know, our goal at Alpha is to really be a capital partner to investors. I think we've talked about that since our inception, and we've worked with a lot of, you know, the top rehabbers, fix and flip builders throughout the area. But I think now is our opportunity to shine and really show what that means. And I couldn't be more proud of the team and the people and partners that I have to help do that, and try to navigate through this and frankly come out on the other side with what I think could be the best real estate opportunities many of us will see in a lifetime. And to just parlay back to you and what MB does in our relationship is that there is no better time, especially since, you know, people are not working. A lot of people have been laid off or they're slowed down to organize yourself, line up your relationships with MB and get your capital set up, work, you know, get pre-approved with Alpha, because when those deals come about and the doors open up of the world again, you want to have all the ammunition to go out and take down deals. So we're as much as we're feeling pain and frustration as everyone is, we're also excited and believe that the best is yet to come. So
Yeah, for sure. And to, you know, kind of give a brief overview of MB Capital for you guys that aren't familiar with us, you know, who MB Capital is, you know, we're a funding strategist. You know, we work on your behalf to build up access to capital inside your business name that you could use for any general working capital purpose. So think of it as the gap funding. You know, we specialize in unsecured lines of credit, which in a nutshell is leveraging your personal credit file to build up access in the business name that doesn't report back onto your personal credit report. So we really have become masters at credit and lines of credit and building up capital and building up access to be able to combine with a hard money lender to essentially 100% fund your deal. You know, Alpha, while, you know, their guidelines may change a little bit, they're still going to give you majority of the purchase and the majority of the rehab to go fund your deal. You know, you may need to bring a little bit more cash to the table, but now we're going to be able to get you more cash to be able to take advantage of opportunities. So there's definitely been some types of changes that we're seeing with the lenders that we're working with. You know, we work with lenders nationwide to be able to create the right game plan for each individual client. We're getting somebody anywhere from $50,000 to $150,000 within 30 days. You know, typically we're doing that through two different types of products. You know, your traditional checkbook lines of credit, where, you know, you're approved somewhere between 25 to 100 grand on an individual line. You know, all based off of personal credit, and typically it's been, you know, limited financials, not needing tax returns, not needing, you know, profit loss statements, you know, good personal credit, you know, decent age of an entity, of a business, we're going to be able to get you a line. And then through the business credit card model, you know, credit cards in the business name that, you know, what we do as a company, show you how to liquidate into cash and be able to use as the down payment gap funding and combine with a hard money lender to go fund your deal. So right now we're seeing a lot of investors coming out of the woodwork because they're trying to build up capital however they can get it, because like David said, you know, when the dust settles here on whatever becomes the new normal, there's going to be a ton of opportunity. So the ones sitting with capital or prepared to take advantage of opportunities, have pre-approvals with Alpha, have access to lines of credit, have more money to be able to put down into a deal, are going to reap the rewards. So one of the main messages we're kind of preaching today is to kind of assemble the team around you so that, once you're allowed back out of your house, you can hit the ground running. So get pre-approved with Alpha, let us start to look at credit situation and positioning to see how we're going to be able to get you some capital. Because, moving forward, things are going to change and it's going to be a fluid situation, but we're already seeing some things change with certain lenders in terms of guidelines. So now's the time to take action for sure.
Yeah, I think, by the way, I think your volume's a little low. A couple people have asked you to increase.
Okay.
It's interesting, being a private lender, we've worked with MB Capital a lot. It's funny, in the beginning, I was kind of like, what do these guys do? This is going back a few years ago, and it seemed like maybe too good to be true in a way. And what's really interesting is that a lot of times I find people with capital or private money, hard money or anything, they have their defenses up initially. And when they really get educated and understand how those tools can really benefit them and help them, it opens and unlocks doors for each person to go out and acquire and buy and invest in real estate. I wanted to drill down a little bit, and there are a lot of questions coming in about, lending parameters. So about 2 weeks ago, before the world came to somewhat of a screeching halt here, we were funding 90% of purchase, 100% of construction. We actually transacted a lot of business with MB Capital where we referred them clients that needed either excess working capital, even if it wasn't for money down, but to work in between the draws. Investing in real estate is always a cash, it's a cash game. You have money going out to contractors. So having lines of credit in a construction or investing business is super critical. And you really need to have that to work through some of the ups and downs. But, with everything that happened, I mentioned at the beginning, a lot of the liquidity in the market and the lenders pulled out. What's fortunate about the way Alpha is structured, we manage and have a very large chunk of our own private capital and capital in a joint venture on a managed account with, with a insurance company. And those dollars are not out with other lenders in the market. Most of them sell to note buyers and a couple hedge funds. And I guess thankfully for us, we have a lot of capital outside of that, which allows us to continue to lend. I'm going to touch on that now because, like I said, there's a lot of questions about it. But we just put up a new window box on our website, alphafunding.com, with the new requirements that are temporary. We anticipate when the dust settles to get back to normal. But if you have a deal right now that needs to get funded and you want to move forward, we've dialed back heavily on the leverage. So we are now requiring borrowers to bring 20% of their project costs and 6 months of interest reserve to the closing table. And I know that it seems like it's a lot of dollars to come in, but you have to understand from a lending perspective, to put new dollars out into this market with the uncertainty, the lender is really taking all the risk or most of it. When we're doing 9100, we're essentially buying the property and funding the project. You have very little risk in a lot of ways. But now putting new fresh dollars into the market with so uncertainty, that's why all this other capital is pulled out. And we're committed to continue to lend, but we have to be responsible for the money that we manage and that we have of our own dollars as well in. And so we are in closing deals. We have commitments coming through. We're actually, oddly enough, getting a lot of deals from other lenders, relationships that we had for stuff that they got hung up on. And very respectfully, they're looking out for their clients first to make sure that they're okay. I will say that it's if you do have deals in, reevaluate it. Like, we're thinking that there could be a 10 to 15% correction in the prices of the real estate market, right? So if that happens, the deal where you're making a 20%, 25% margin, that can easily drop down to very little dollars. And, if days on market get long and it takes a while for absorption to happen in the real estate market, you could hold that project longer and not be as profitable. So I think from our perspective is helping analyze the deals. Even if you're willing to bring the money, try to be a good steward of their money and ours, and guide them of whether or not they should be doing the deal in the first place. So everyone should be cautious. It doesn't mean that there aren't deals to be done, but we've dialed back, and I'm telling investors, be the same. Maybe go back and renegotiate with your sellers, or ask for extensions till the dust settles so you can get better leverage. But we're going to.
And I know Alpha does that with a lot of their clients. You'll actually review the deal with them to make sure numbers make sense.
Yeah, so a lot of the other lenders are basically order takers in a sense, that get the specifics and load it up to a hedge fund, and they decide whether or not they're going to do the deal, and they may come back and change the requirements at the end when the originator in good intent promised to do something that they couldn't do. The last 2 weeks is a whole different story, right? Like loans that may have been approved and capital just pulls out. This isn't an individual lender situation. This is a worldwide liquidity issue, and that's very different. But pre virus, a lot of these lenders will get the file in and send it off. We fully underwrite and we control our lending decisions and manage the accounts of the capital we have. And it is a big difference because we have real risk dollars up in every deal, and it's important for us to protect ourselves. So selfishly, if we think the deal is risky, we're going to talk to you and let you know. The other part is, if you do bad on that deal and lose money, you may be out of the business.
Right.
And I want to get as many repeat borrowers as I can. If you lose money on a deal and it takes you out of the industry, well, there goes a good relationship. And so we're trying to work together to get as much funded, but be responsible about it.
Yeah, and it's one of the things that I love working with you guys, because you're realistic with your borrowers, and what you said is exactly right. I mean, we're getting a huge call volume from investors that they were about to close on a deal, and now their lender needs them to put down an extra 20 grand or 30 grand, that we need to go get them quick access, and that's not necessarily a per lender type deal. It's just we're dealing in uncertain economic times, so there is changes across the whole marketplace. Now's the time to kind of reevaluate the deals that you're doing. Do they make sense? Are you going to be profitable? And are you in a position to acquire more money? And the real estate investors that are cashed up, or have access to cash through lines of credit cards, they have the access, that funding toolbox, will be able to take advantage of opportunities and kind of not miss a beat here. And again, that's our biggest message here, is start to prepare for moving forward. Get pre-approved with Alpha, talk to us at MB so that we can walk you through exactly how much capital we can start to position you with, so that if you need to put down 20% of a project cost, do you have that? And not only do you have the 20% of the project cost, like David mentioned, but then do you have 6 months of the reserve sitting there as well? That's going to be a prerequisite, it sounds like, to get some of your deals funded and move forward.
Correct. Yeah, I think to just play off of what you said, now is the best time ever to build your team, organize your business, understand how and what you want to do. If you have a lot of time at home, you can put that together. And, I talk about very frequently when I speak at events and stuff about the mindset of money. And I think that, people look at money very differently than any other thing that they need to contribute to a deal, right? Like construction. If you need a new roof on a project that you didn't originally plan for, you say, okay, how much does this roof cost? And what does that mean? And how does it impact the deal? With lending, it's no different. There's a cost to it, and it allows you to capitalize on deals that you couldn't do, or, it may just be one deal, but it allows a lot of folks to scale. I find it interesting, the evolution of a borrower and a real estate investor, because typically when people come out initially and they're starting to get educated or starting to invest, they have their guard up about money, and as they should. And a lot of times people look at private and hard money lending is expensive and not a good option to get involved. But if you're not a contractor, you have to hire a contractor to do your project, right? The capital, with our lending programs pre-coronavirus, you could come in with, 10% of a purchase price, and the rest of the money would come from the investor. That's so powerful, right? And so as people get experience, those folks become some of our best and biggest repeat borrowers, because they really understand and see how critical we are to be able to allow them to capitalize on opportunities. So again, the best opportunities that we're going to see in decades is coming, whether it's in 4 months or 12 months. There's going to be stuff that fall out. So you need to be organized and have this money ready to go. You should, be set up. And even if it's not with getting a line through MB or anyone like that, make sure you get family and friends together and ask people that want to invest in real estate and put those dollars together to start setting up to go out there and shop.
Yeah, I mean, build the funding toolbox. We preach on building the funding toolbox. So, whether it's lines of credit through us, whether it's credit cards, whether it's, friends and family, private lenders, start to line that stuff up now. Because, we always preach that when one of the tools are being used in the toolbox, if you have another tool and that opportunity pops up, you can still get that deal funded. So if you have friends and family that want to invest in real estate, that are willing to give you money at whatever interest rate, 10, 12, 15, it is what it is. Don't miss out on the opportunity. I talk to a lot of real estate investors all across the country. And you're right, they do, especially the newer investors, have a fear about money, a fear about borrowing. How much is the interest rate and how much is the leverage? And, I always tend to focus on, what am I going to go do with the money, right? Like, how much am I going to, I don't care if I'm paying 50% interest and 10 points. If I'm going to go do a deal where I'm going to make 50 grand at the end of it and everything gets paid back, focus more on the profit right now, because, that's the biggest thing moving forward, is how much money can you go make with lines of credit and with, hard money lending, even though it's going to cost money to borrow. How much profit can I go make? And like David keeps saying, there's going to be a ton of opportunity to take advantage of. So prepare now. Start to get the ducks in a row.
Yeah. Angela Good asked, and then we'll go to Jorge Rojas had a couple questions, but Angela asked, does Alpha Funding offer $1 million lines of credit for fix and flip like FRL did in the past, or are you only lending on one deal at a time during the current situation? So we are, but again, each deal is going to be its own fingerprint. So even with that line of credit, the parameters have to match up. So right now, the equity requirements from each investor will need to be 20% of project cost and 6 months of interest reserve. So although we'll be comfortable putting out the $1 million with you as an individual investor, it would also come down to the individual deal itself. And again, I want to stress that the requirements have changed. We actually have a pop-up on our website at alphafunding.com. There's a get pre-approved button there where you can submit, even if you don't have a deal, some questions. Our team will get back to you right away. We're working around the clock to handle all the volume and questions coming through. So you can be approved for that and go from there. Fred was reiterating in a different way what I was saying. Fred's my partner and was the owner of FRL, who we merged with. It is deal by deal. If we can go up to that $1 million, but if the deal doesn't meet the parameters of our new lending requirements, you would have to fit that bucket. Okay, thanks, Dave. I'll go to your website. Thanks.
That was a good question, because I get asked a lot about fix and flip lines of credit, because most people think they operate like a normal line of credit, where even though if you have you're approved for $1 million fix and flip line of credit, each individual deal still needs to be approved on its own, and you still got to follow the guidelines. So it's not like if you have $1 million line of credit, you're going to get 100% funding up to $1 million. You're still going to need to have skin in the game. You're still going to need to have the percentage of the cost of the project and reserves to have in cash. So having a fix and flip line of credit is great. It means that you're pre-approved with a hard money lender, but it doesn't mean that you're going to be able to 100% fund your deal and not having cash into it.
Right. Jorge Rojas, who put in a question, thank you, I appreciate it, at the very beginning of the call. Are you still using most recent similar closed comparables to determine ARV? The better I understand the way you look at a deal now, the better I can be able to determine if I have a deal. I love that, Jorge, that's great, because a lot of people just want to move in whatever direction they want, and understanding how we look at stuff is obviously important. So when an appraisal is done, they can only take comps from today. They can't take comps in the future, obviously, right? So when we do an after repair value appraisal, we're going out and assuming all the work's done. The appraiser's snapping his finger, pretends like it's done in a professional, workmanlike manner, and compares it to those active listings. We don't have any other choice but to look at that. With that said, appraisers have they're licensed and they have insured, because they can be sued for false valuations. And so there's a guidelines and a methodology that they have to follow. So there are markets that are considered trending up or down, and depending on where that is, the appraisers can make adjustments, but there's limitations on it. So when we're taking a look at an appraisal, we're going to look at those comps. We do think that there's going to be pullback in the market. It's tough to accurately predict, but to be conservative, we do think that there could be very low double-digit decline in many markets, especially the high-end luxury market is going to be hit pretty hard. We think very strong for medium income housing, that there's still a lack of supply and a strong demand. And when people get a little confidence back, they're going to hopefully go out and shop, and they'll get more for their money. But we feel confident that that product will move. So as far as the appraisal goes, we're just kind of looking at what they have. If we're really uncomfortable with it, we'll go back and talk to the appraiser. But we are absolutely not going above 65% of the after repaired value. With the 20% down, the deal's horrible. If you are 20% down and above 65, the margins are too tight, and you shouldn't be doing the deal anyway. And some deals, depending on risk, may look to go as low as 60%. And some of that is to play into the individual stuff. So Jorge, what I would say is, again, if you go to the website and click on the pre-approval, even if you have a scenario, and you can do this any day, our team will quickly get back to you with some idea of how that shakes out, assuming that your numbers are the gospel until we can do our underwriting. So if you gave us a purchase price, a rehab budget, ARV, we're going to say, hey, based on this, this is our view of it. When we get the appraisal, that'll back up our thought. But going to alphafunding.com and clicking on the quick pre-approval will get you connected with scenarios or questions in a matter of minutes.
This is a question that came in privately, but from Fred. Do you have to use the money that we get for you guys as the deposit on a flip? You could use the money that we get for clients for any general working capital purpose. So you could use it as the deposit on the flip, that gap funding. You could use it to 100% fund the rehab. I have clients that will use the lines of credit and the access that we'll get them and front the rehab so that they can keep their contractors moving, can limit the amount of draws they have to take from the hard money lender. You could use it for, like I said, any general working capital purpose. If you're getting into a buy and hold situation, if you're doing the BRRRR model, if you're a wholesaler, I work with a lot of wholesalers that don't have a traditional need for gap funding because they're not actually doing a flip or a buy and hold. Well, what they're using it for is they're using it for marketing. They're using it to help build buyers lists, put out bandit signs, door-to-door mailers. So having that pool of funds that you could use for anything is going to be huge here moving forward, because if you can market and get deals on your own without having to go out there and knock for doors and try and find them the alternative ways, it's going to help you. So yeah, you can use the funds for any general working capital purpose. Pull the funds off the line, put it into a checking account, let Alpha see that you have the 6 months reserve sitting there. It's going to help facilitate your deals here moving forward and on uncertain times. And then one of the other questions that I saw a few minutes ago was, have your rates, appraisals, and LTVs for cash out refis changed in the past week? David, I know you guys were starting to do the long-term rental loans for the buy and hold investor. I've seen and heard many different things the past couple of days. So where are you guys at in terms of like long-term rental holds?
Sure. So we're certainly happy that we're still able to put out fix and flip. And I can tell you, and we're in close communication through a national organization with other lenders and a lot of strong relationships we've built up over the years, that most of the money in the hold market or non-QM market has pulled out. Our company as well is not funding 30-year or rate and term products. However, I will put a caveat to that. With our capital that we manage right now, we've talked and very interested in putting together a term product that's very different in terms of the money that we have than what's out in the market. But we're working on that now very diligently. I don't know when that'll hit, but we are working to get that product out there. I think in general, the main sources that have been there will be gone for quite a bit of time. There's just the challenge, which may be too much detail, is that a lot of the lenders that provide, a lot of the capital that provides liquidity into the market does so with bank leverage, and they're having massive liquidity calls from their warehouse lines from the banks. So the banks give them leverage. They put up, they could put up $100 million of cash and they get $400 million of money to play with, and they fund these and sell them to a secondary market. That's all been pretty much wiped for right now. There's very limited dollars there, but I think groups like us and other groups may find some, great ways to get new dollars into the market. And eventually, we think that will open up again, but it may be a while, which is challenging for a lot of people who are, we're looking at a term loan and are in a bridge loan and can't get out. So,
yeah, because I know
it's a very tough cup to fill today.
Yeah, because I know a lot of clients that we work with. you know, they're going to have to change how they're looking at their exit strategy, right? You know, for the buy and hold investor, are you going to be in a position to be able to get one of those long-term rental loans? You know, where everything's been in the past, you know, couple months, couple years, to be honest with you, you know, you've been able to find a non-QM lender that can get you into a 30-year fixed rate product and a rental property in the business name with a 600 credit score and just going off the debt service of the property. So it made it easy to be able to do a cash out refinance, pay the hard money lender back, you know, pull your cash back out of it, and then go on and do the next deal. Where now, you know, investors need to be conscious of their exit strategy. You know, are more properties, you know, more for a flip than opposed to just, you know, a buy and hold. You know, are you in a position to where you can qualify for a long-term rental hold? You know, because like David said, a lot of lenders are putting those on pause right now. So if you're in the middle of a deal that you're thinking may be a hold, you know, make sure that you're talking to your end lender to make sure that that's actually a possibility, especially if you're a couple months away from completion of the project. You may need to switch up your exit strategy to, you know, maybe be more of a flip than a hold. And that may affect some of your numbers. So just certain things to start to look at as things are starting to change here moving forward.
Yeah.
Here's a question from Ed. What qualifications are you looking for unsecured funding with MB Capital? You know, I'll give you, you know, kind of broad terms. You know, everybody wants to know what's my credit score got to be. And I hate that question because, you know, we care more about credit data than just credit score. And, you know, for what we do, a lot of times we're going to get you in a position if you're not able to qualify. So if you're interested in capital, you should have a conversation with us. But typically what we want to see is around a 680 credit score. If we can have a limited number of inquiries in the last 6 months, ideally, if we have no derogatory information, that would be great. And if overall credit utilization is about 30%, it's going to put you in a position where we can get you funding. In terms of the age of your entity, we can get a brand new day-old entity still funded currently right now in these, you know, this type of environment. So even a brand new investor can still get funding right now. You know, as long as personal credit is in a decent position, we're going to be able to get you access. And that's why I say if you're needing capital, if you're hearing some of the changes going on with guidelines, with some of the hard money lending, and if some of your private investors have decided to, you know, sit the next couple of deals out because the stock market took a hit and they just don't have cash or liquidity to private lend, now's the time to be preparing to be able to get access through lines of credit, credit cards, whatever access we can get you to go out there and take advantage of deals. Question from Talima. Now we have to show documentation of liquidity as well as paying upfront 6 months at closing on top of other charges. What if we're looking to use other sources to obtain the funds, credit cards, locks, friends and family? Now we have to show seasoning of said funds with 3 months bank statements. Are you going to need to see them seasoned in a bank account, or as long as they can show proof that funds are coming from somewhere? Maybe
so long, if it's coming from somewhere, we kind of just want to understand what their financial situation is and where money's coming from. At the end of the day, what's exciting about the private lending space is that there's a bit of autonomy, obviously high level risk parameters, but we're going to take into account the individual person, how well organized they are, where their money's coming from. If they do have dollars, the last thing we want to do is get into a transaction where we are going to be in an awkward spot together in a few months if you know, you're unable to move the project along for, you know, fronting construction work or, you know, when payments are due or things like that. So it's really, I want to say, more on a case-by-case basis. And we just want to understand, like, if you've had no dollars in your bank account and you know, you're coming into a $500,000 project, you know, unless you can show another account or source that's coming from, and some explanation, it may be challenging. So hopefully that answers the question. There was someone kind of on that, and they are saying we do have, yes, we are requiring 3 months of bank statements right now, which we had never done prior. But you know, this is the new normal for the time being, and we're going to look at those statements and we'll make a determination from there. You know, it's kind of more of a fluid situation.
And on that point,
So
I will say that, you know, with clients that we refer over to Alpha, you know, one of the good things about working with them is that you can talk to them. You can explain things. It's not always so cut and dry. So, you know, whether it's a client where we've used credit cards to fund the down payment, as long as you know where it's coming from and I have an understanding of the source and that you're able to cover, you know, 3, 6, 9 months of payments, you know, a lot of times the working relationship between us is good to have as well. But yeah, they're very workable, and, you know, talk to them, explain to them where the source of the funds are coming. You know, they're going to be able to work with you here to be able to make sure that they're getting deals funded. And that's why it's, you know, we refer so much business over to them.
yeah.
Michael asked, what about doing another webinar like this in the future when things change? I agree 100%. You know, we're going to try and do more of these webinars together and in general, especially now during some uncertain times, just to kind of update everybody, try and do some Facebook Lives, push it out to, you know, more mass. But yeah, our goal is to update you guys on what's happening in the market. How are things changing? How do we need to prepare? You know, working with an MB and an Alpha, the good thing about it is that we're working with lenders nationwide. We're working with clients nationwide. So we're getting to see and feel exactly what's happening out there. So yeah, we're going to do more of these to be able to update you, kind of be that source for go-to information. So, you know, keep looking out on email, on Facebook. If you haven't liked Alpha on Facebook or MB on Facebook, MB Capital Solutions, go look us up. Alpha Funding Partners, go click like. We're going to be putting out a lot of content here moving forward.
Ralph Germain, thank you, asked, are you still currently working with new or first-time investors? I've spoken to several lenders over the past couple of days, and while some have stopped lending altogether, there are some who have decided to cease lending to new or first-time investors for the time being. So the direct answer is we will lend to first-time investors, but the benchmark is high, and let me explain what high means. There's the specifics of a little bit higher in credit, minimum would be 650 on a first time, but for us to go into a deal today in a new market, in this market, we're going to want to make sure that the person is highly organized and thoughtful about, like, when we do our borrower interview, really making sure that we're comfortable that you've lined up all your ducks in a row. Like, if you are a contractor and you've got a track record of doing stuff, or a project manager in another space and you're well organized and thoughtful about what you do and why you're doing it, that really helps. But we're also going to be very cautious on how much of a renovation project we'll do with a new borrower right now. You know, there's a lot of challenges with getting construction moved forward because although construction's allowed to move on, some towns or inspectors are not coming out for inspections. So that delays your project, and you have other issues to deal with. So for a new borrower, like a light rehab, a cosmetic rehab is what we'd be looking at. Maybe a medium rehab where you're, you know, maybe doing more than painting floors, but maybe you're renovating a kitchen and a bathroom and maybe painting and some outside work. Each deal is its own fingerprint. I would, again, suggest if you have a scenario and want to run it by our team, go to the website and click on the Get Pre-Approved, because here's the thing. I was telling the folks the other day that were looking at deals, you know what? Maybe you don't want to go into this deal right now. Maybe the leverage point doesn't work for you right now. That's fine, and it's probably the best thing. So get yourself set up, because if you get pre-approved with us, maybe you know, when things open up and change a bit, you'll be in a really strong position to tackle, you know, some more deals. But we will lend, we will scrutinize it quite a bit more, but we are actively funding for new investors.
And Matt had asked to discuss a little bit, you know, for using the credit cards and the unsecured locks, how to be able to draw down on the cards and the lines of credit. And I won't go too deep into it. You know, we could go down a rabbit hole. But, you know, part of our process is showing you as a client, you know, when we're able to build you up with a credit card plan, how to be able to liquidate those into cash without doing a cash advance. Cash advance is a very dirty word. If you're a real estate investor out there doing cash advances on credit cards, stop it. Reach out to us. We'll teach you a couple different strategies to be able to liquidate cards into cash. Literally liquidate a credit card into cash, put it into your bank account, show it as seasoning. When we have the traditional checkbook lines of credit, it's a little bit easier to get a proof of funds letter to show an alpha funding that you have a line of credit for X amount of dollars that's not being used that can be sourced for the down payment. You know, the one thing I'll say about the traditional lines of credit is we are seeing some changes there in the market. Before, where we didn't need tax returns or financials, some lenders are already starting to ask for that, some aren't. So the traditional lines of credit is very, very fluid at the moment, but we do expect some changes and tightening around that. The credit card model, one of the other things that we do for clients is we set them up with a third-party company that, for a real estate investor, when you have a property under contract, what this third-party company actually does is pull funds from the credit card and will wire it directly to the title company for closing. So as long as you have an agreement of sale, they'll run that as an invoice, pull funds off the cards, send it to the title company for closing, and essentially you swipe your credit card to purchase a piece of real estate as the down payment money. So we could use that source of funding to either liquidate and put it into a bank account or send it directly to the title company for closing. So there's ways for us to get creative and using especially 0% credit cards to get our deals funded so that we don't miss out on an opportunity.
All right, Jorge has another question. Ralph, thank you. Generally speaking, what kind of points and rate will you charge a new investor with 750 FICO, very organized, medium rehab? I think you're likely to fall, between 9.99% and 10.99%. That's interest only on the money as deployed. And you're looking at 2 points on those loans. That's kind of where you're likely to fall, but each deal is different. And until we see the background and understanding of the individual borrower, that's kind of where we'd be. We have some more aggressive pricing with experienced repeat folks, but you're likely to fall in that general range.
Yeah. Guys, any other questions before we start to wrap up? It looks like we've answered pretty much everything on the side. Just before we start to, yeah, Ed.
You want to be with a lender who thinks ahead of the curve, and we bought like 1,000 hand sanitizers right before coronavirus. I give props to my partner Fred, who loves. He's always thinking about cool new gifts to give out. It just worked out pretty well that we got it beforehand. So if you need hand sanitizer, I'm not sure how we're going to get it to you now, but we got lots of it.
Too bad you didn't go with the Alpha face masks. You missed the boat there. So guys, Ed just asked, about our contact information at MB Capital. Eric shared it there in the group chat. You could either call 888-783-7197 and set up a time to talk to one of us advisors. You could also go to www.mbcapitalsolutions.com or right on Facebook, MB Capital Solutions. There's quick, easy ways to set up a time for us to chat. But listen, I appreciate everybody coming out today. David, I appreciate you taking time. I know things are crazy right now. So, I think this was good. Everybody keep a lookout. We're going to do this again to kind of keep updating the investors out there, our database on what's going on in the lending market. And anything else you want to add here, David, before we jump off?
No, I think be patient, get organized, be prepared. Like I said, they're going to be the best opportunities to make money if you have capital on the side or can get access to it. That is the key to building wealth out of this crisis. We all work really hard, and if you put your efforts in the right place and get organized, you'll be rewarded for that. So I continue to stress to everyone, stay active, keep up with all the companies you're working with, work on your relationships. That's where that's how you build through partnerships and relationships.
Yeah, use this time to like David said, get prepared. Reach out to Alpha. Get pre-approved. There's no harm in getting pre-approved right now. Reach out to us. Let's see how we can help you. So any way that David, and the team over at Alpha, or me and my team over here at MB can be of assistance, don't hesitate to reach out. We're happy to help. Things are a little bit crazy right now, so if you don't get us on the first shot, don't worry, we'll get back with you. But we're happy to help any way that we can, and we do appreciate you guys coming out and spending some time on a busy Wednesday. 78 people. Pretty awesome to have you guys join us here. So we thank you very much.
Yeah. Stay well.
Stay well. Wash those hands.
Sometimes.
Thanks, guys.
All right. Have a good one.